Hi there, I'm Richard Hill, the host of eCom 1, and welcome to episode 170. Made it to 170. How did that happen? Happy New Year to you all. In this episode, I host Tim Lachlan, the CFO of Salesfire. Quite an apt episode for this time of year, where we step through all things metrics and the things that you need to be measuring within your store and your store's finances to have a successful 2024. And we discuss the appetite right now for M&A, how to maximize your valuation and potentially steer you away from some of the hurdles when it comes to due diligence when you're looking to sell and maximize the valuations in your e-commerce store. And of course, so much more in this episode. If you enjoy this episode, please subscribe or follow wherever you listen to this episode so you'll always be the first to know when a new episode is released. Now, let's head over to this fantastic episode. Hey Tim, how you doing?
Good morning, Richard. I'm very well, thank you.
Great. Well, thanks for coming on the show. Now, last time I saw you, we were playing a shocking 18 holes of golf about 6 weeks ago.
I'm afraid so.
In possibly the worst rain I've encountered for about 3 years, but we ploughed on.
Certainly the worst golf.
I think there was a rumour that our team actually won, so I think somehow we may be that 1 point that we got. Well, thanks for coming on the show.
Thank you. Thank you for asking.
No problem at all. I'm looking forward to talking all things finance, which I think is quite apt for this time of year. But I think before we do, I think it'd be great for you to jump in and introduce yourself to our listeners and how you got into the world of finance and e-commerce.
Yeah. So my name's Tim Lachlan. I'm a chartered accountant of many years standing. So I originally qualified with a Dickensian sounding firm called Spicer and Pegler that then became Deloitte. So was Deloitte's Leeds office in 1991. Time by. I then took a career in industry and have been through numerous sectors. Probably my first role in industry was with in retail with Empire Stores Group that became La Redoute. And it's interesting in the sense that I think those mail order catalogues, they had the internet sewn up, but they didn't realise it in the day in 1991. And then, very career, really focusing on technology. I worked for an internet startup in 2000 that was related to Time Computers, if you remember them.
I remember it very well.
Well, Time Computers, I work very closely with Tahir. He's the entrepreneur behind it. And Tahir had got that business to 300 million turnover when he was about 24. So it was an incredible time, but it was a lot of lessons learned in the IT industry from then, really. And then continue. I did 13 years with a firm in Wetherby, based in Wetherby, but was private equity backed, called Esteem Holdings. And that was where I spent the majority of my career. And we were an acquisitive IT services company. And left them in 2016 to take up the sort of the current role I've got now, which is CFO of Salesfire. And it's built on those things of Salesfire, working with entrepreneurs, working in the IT and retail areas, in particular e-commerce retail. And most importantly, working with people who are nice to work with. That's the key thing I've learned in my career. And Salesfire's got all of those things. So, that's where I am today.
Wow, that's quite a mix. That takes me back a little bit. The Time Computer days, that is actually the industry in my previous life sort of thing of pre-agency and podcasting, computer business. That sort of times quite well because that's quite apt, I think, for this time of year. When I look back to the computer days in the computer business, I remember it being, back in I think going back to 2000s there, and that's pretty much I was probably in mid of my career there in that industry, and you said I think 300 million that Time got to, and and I remember the sort of people we were dealing with, it was tens of millions a year and hundreds of millions a year, and the e-buyers and the Dabs of the world and Ingram Micros.
Right.
And that was my world previous, for about 12 years. And
it's great.
And I remember that.
When I started, nobody had a computer at Deloitte. I remember that one guy had a suitcase size computer with a screen about that big. And he was a computer expert, and he's got a computer. No times change.
I think that's really relevant to where I think we should go, because I think, back then, it was a newish thing, and it was so much, everyone's buying a computer and they're thousands of pounds, a couple of grand for a PC, the margins, the money that was being made. But then fast forward however many years, the margins, I remember being so horrendous at the end. And if you think about how many sort of independent retail computer shops there are on the high street now, I think I can't count any, in my local town, maybe one or two. But they've maybe pivoted to that service, and B2B, and servicing companies and, and doing support rather than the sale of the items. So I remember it going from, very, 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 very lucrative business to very, very tough business overnight. And now I think, we're sitting here, it's New Year and, we've gone through November, December, which in theory should be a busy sales period for most of our listeners. But the reality, I think, we'll be hitting home quite hard now in terms of, right, it's a new year. What do you think are some of the challenges, the biggest challenges?
New start.
That our listeners will be facing now?
Yeah, it all comes back to cash. And it is that point in terms of, as we look in terms of, maybe the challenges that face the CFO is one of the things that you're coming on to. And I think for a CFO at the start of the year, it'll all be about cash. And it usually is in terms of, have I got enough cash headroom? Is my working capital management up to speed? How do I get my cash in from the customers before I need to pay my suppliers? And it's always just simple things in a way, but that's the real focus. And it's having a strong approach to cash. And all the successful entrepreneurs I've worked with, they all look at their bank account every day. And the entrepreneurs I work with now, that's it. They open the bank account and say, "What's this?" And I still get questions every day. What's it? It's on online banking. What's this? So it's keeping that close attention to cash that really makes a difference. So it's something that is in common with all of the successful entrepreneurs I've worked with.
I wonder how many people, if we could take a poll right now, which is quite tricky, but if you're listening to this podcast and you're an owner, manager, MD, and you've got access to the bank, how many of you wake up and do you check your bank before you make a cup of tea every day?
That would be a good poll, actually. That would. There's certainly.
I think it would be.
You always do it.
Would it be tea or bank? I think that's maybe a LinkedIn poll right there. Tea or bank in the morning. Cup of tea or bank. I think I am bank.
I'll just check.
Yeah. So in terms of cash flow then, cash flow, especially this time of year, we know we've got, a few weeks left to the end of the month, and the likelihood is, half that revenue that you pulled in December, November is got to be, that stock's going to be paid for if it hasn't already fairly soon, maybe end of June, end of Feb, depending on the terms. So in terms of improving specifically cash flow, what's your sort of couple of two sort of core things that you would recommend our listeners to look at?
One of them's a bit of preparation in that, making sure your actual terms of trade are appropriate. So when we were in IT services, it was make sure we get paid on 30-day terms, say, and before we can pay our suppliers on 60-day terms. And as long as that works, it's fair and reasonable for everybody, it's fine. So it's terms of trade and employing a good credit controller. Those are the two top hits, I'd have to say. I would say in terms of trade, it's the standard might be 30. There's nothing wrong with 15 days. And there's nothing wrong with, is it all right, immediate payment? It's been as reasonable as you can in terms of collection, so as not to defeat a sale, because the salespeople will always say, "Oh, this customer really likes the service, but can they pay weekly or can they pay monthly or can it?" Look, it's an annual subscription. It's a lot easier in a larger company to be an annual subscription for a software service. Because
it's quite an interesting one with that term, the eCom. In e-commerce specifically, because obviously most sales through websites, so obviously you're getting paid straight away. You might have a couple of days delay with the merchant payments coming through. If you're then getting 30 days, you've been paid. You've also got to be careful. That's the trap that I think a lot of merchants can fall into. They check that bank. Oh, we've got, let's insert £1 million in the bank, but hang on a minute, you owe 1.1 million. So you actually, So I think it's any tips around. I think there's some straightforward things. Obviously, obviously we're talking to a lot of different people here, whether they're trying to scale from that first million to 2 million, 2 to 5, and 5 to 10, and 10 to 20. I think there's some very different things, that you can implement. But let's say you're, a merchant doing, 1 to 2 million, in terms of sort of that cash specifically, around it. Is there anything you recommend around doing things with bank accounts and having separate bank accounts for cash?
I do think separate bank accounts is a good idea, just because split your current account, actually keep as much as you can in the deposit account to manage the interest that you will get. And with interest rates as they are now, that's the one benefit. We've certainly seen a substantial increase in the return that we were getting. Shop around, because I think whilst it's a real pain opening a bank account these days for most people, if you get to a certain level, the corporate banking, and I will give a plug to Santander. They've been really good. And my previous bank, which is one of the high street ones, wasn't. And we've been able to triple the amount that we get as a return by switching banks. It's a pain, but it is worthwhile. And keeping your relationship manager on their toes and actually, getting the bank to work with you. They've done very well on that.
I do think, like you say, obviously interest rates have gone up, which if you're borrowing, obviously is more challenging. But if you're sitting there, even if it is supplier cash, potentially, and you're moving it. But if you're, let's just take straight 100K sitting in the bank doing nothing, or whatever it may be, 100K, 500K, whatever, put that over a year, 100K in the bank right now. What you're going to get, obviously this is going to change, but you're going to get, 8,000 or 2 or 3. Yeah. Or 4 maybe, if you push it.
Somebody else's.
Yeah.
So I do think it does.
And whereas you may be in the habit pre-interest rate changes, a year ago, say, where, it was negligible whether it was worth it. Yeah. So now, simple change, online, open your bank account, savings. Obviously, some of them you've got to be a bit careful with, because obviously there might be like that 30 days where you're not allowed to, or there's a penalty, you lose X, Y, and Z. But, quite straightforward, and potentially then having separate bank accounts. Because I think, as you alluded to, people wake up, look at the bank account, and then they go, oh, we've got 100 grand or $1 million. But the reality is that isn't your money quite often if you're not allocating costs to the tax man, the VAT man, the supplier. So
what's generally all about everybody's tax returns. So it's you've got money there.
It's a pain. It's an interesting stroke painful month, I think. I just wanted to introduce you very quickly to our sponsors, Pricing. Now, Pricing is a competitive price tracking and monitoring software that can dynamically change a product's prices on all sales channels. They work with brands such as Samsung, Sony, Suzuki to increase their online revenue. Now, if you run Google Shopping, which I know a lot of you absolutely do, this software is absolutely key to accelerating profits. One of the reasons I recommend Pricing to my clients is because you can find out your competitors' pricing and stock availability all in one simple to understand dashboard, giving you a huge competitive advantage. Now, if you have any inquiries and questions about this software, or you're ready to get cracking, we have worked out a very, very special deal for our listeners where you can get a free month's trial and then 25% off for the first 3 months. Head to ecom1.com pricing and complete the inquiry form, and we will connect our listeners to the Pricing team. Right, let's head straight back to the episode. So, obviously, the idea of this episode is to make sure that people learn more in terms of their finance function. So what other sort of key metrics would you say, when you're analyzing a company, I know you've worked in various functions in various, 300 million, plus, Salesfire right now, which I know is, again, we do a lot of work with you guys, large company. What sort of metrics are you measuring, monitoring, that you'd also recommend to our listeners to analyze the financial health of a company?
So the metrics are really, again, driven by, say, my background in private equity. And as you look at the numbers in any company, the metrics that are involved and always will be is revenue growth, which way is the business going? Profitability is becoming increasingly the most important metric for a lot of growth companies. And then customer retention, and 2 measures on customer retention, which gets into a bit of the detail, but it's gross retention. How much, if you win a customer on a subscription business in month 1, how many of those customers have you got left at month 12? In terms of pounds, It's a percentage. People look at that, and you need to be about the 85% mark. So you've still got 85% of your customers. Anything above 85%, you're doing really well.
Yeah.
And then they look at net retention, and net retention says, okay, you had those customers 12 months ago, you've lost this much, but you've also been able to upsell them packages. And that net number, if you're getting towards 100% or above, you're doing very well.
Yeah.
So, and those metrics, they apply to a great many SaaS businesses in terms of out there.
Yeah.
The profitability one, though, is the one that's, I would say, I mean, it's 2 years ago, everybody was just talking about revenue growth. It was purely revenue growth. If you raised investment, you take a couple of £1 million and they say, right, go on, spend it, get it out there and spend it on your marketing and advertising. How much can you grow by? And you need to be growing by 40% plus. That sort of changed. And I think now in looking at the sort of general market research, it's saying you need to be generating profits. And you can see there's been lots of those high-profile SaaS businesses that have gone bust because they achieved revenue growth, but it wasn't a sustainable level. Yeah, and they just didn't have an eye to cash. And I say even in the past couple of weeks, we saw the demise of Cloud IQ. Now, their last set of accounts had said they were hoping to raise $2.5 million, and obviously it didn't come through. But it's one of those where they'd achieved growth, but just couldn't achieve the cash headroom and runway on it.
Yeah.
So, it's still a tough marketplace. For retailers,
a big change this last couple of years.
Yeah, it has. I think for retailers, it's always been a different marketplace. It is revenue, but it's revenue that is sustainable, and again meets those working capital requirements that get your cash in before you have to pay your suppliers. So it's,
that's great.
It's a very different marketplace than it was even just a couple of years ago, I think.
So those listeners that are maybe thinking about, either growing their business through acquisition or obviously selling their store, what's the appetite like at the moment? Obviously things have changed this last couple of years in terms of, investors and valuations are, I think we're saying are a lot more cautious around looking at profits rather than simply just revenue, because obviously there can be a lot of could be a nice loss behind 10 million, 2 million, 50 million revenue is one thing. But what would you say the appetite is like at the moment in the e-commerce space?
I think it's still a conservative market, but particularly in the US, there's firms that have raised an awful lot of money that need to find quality homes for it, and they need to grow through acquisition. So I think there's a lot of activity in the US, certainly looking towards Europe. The exchange rate is quite favourable, but the focus is very much on profitability as opposed to revenue growth as it was in the past. So if somebody's out there and there's a SaaS business, it's the technology behind it, it's the underlying profitability of the business that if somebody acquired it, what can they make of it that they'll be interested in. From a retailer, it probably still is volume. It's still that one is if you're 5 million revenue, you're going to get a better valuation than if you're at 3 million revenue. So there's still, it's still an element of volume to it in terms of the business. But there's, lots of advisors out there that publish some very good market research. So they'll tell you the direction that valuations are going in. And you can, usually get a very good idea before really seeing if it's the right time for you, because timing is the secret to all of these things, I think.
Isn't it just? I had somebody on the podcast not so long ago, and they sold their eCom store just before COVID hit, or just right at the beginning. But then COVID he sold it. He did very well out of it. But then it sort of tripled in about 5 months, the business. So if he'd waited 6 months or so, the valuation. But that's the game we play, isn't it?
It is, and then you have to say the post-COVID bubble would have burst, and then they said, "What we bought?" So it might have got away with not the maximum value, but probably the one that's best for all parties. You don't want to sell your business and then see it disappear. I guess one of the businesses I worked in, the revenue went from one business reseller. We were selling, say we were at 30 million revenue, and then in 1 year it went to 20 million because Oracle acquired Sun Microsystems. So it just the pain for the business afterwards of, wow, that was a big hit.
Yeah,
it took a long time to
well,
get that.
I saw that a lot firsthand going back, the sort of circa 15 years ago when I was very deep in the e-commerce and PC space. Obviously, PCs lots of margin, and then literally it felt like overnight, but it was a 2-year thing really.
Yes.
And I remember same thing. The valuation of my business at a certain time was a very interesting number, shall we say, and then 18, not even I think a year later, it was not a very pretty picture, at that time.
And these things go in circles, Richard, don't they? So you need to be, have a view in terms of where you are in the cycle, I think. But it's also one of those where if you've got a sustainable business, you can work through it, and it's then you can choose the right time with a bit of preparation, as long as you're not tied to a deadline. And if I have to exit in 2 years, then you're going to take what the market's there. So it's just a question of being patient, I suppose, with these things.
I guess the question I would say is when you're sitting there, and you're running a successful business, and and you're in the thick of it, and you love the business, you're doing well, you're riding the wave of you started like a lot of things. They start almost like in a back bedroom, starting a few things potentially, trying an idea, and then fast forward, whether that's 2, 3, or 5 years, you're doing it for £20 million a year or $30 million. I don't think the exchange rate's quite that good, but and all of a sudden it's gone from one-man band to a 50 head count and da-da-da-da-da. And obviously, I guess what I'm driving at is, when do people, like in terms of getting investment or selling a business, what are some of the plateaus or some of the triggers, or, what do you see? Obviously, you've been involved with, the current business you're in now in terms of investment, and obviously in a lot of other businesses. As a business owner, I think some people, they leave it too late, and then it's worth nothing. If only I'd sold the damn thing, or they get, this, they sort of don't enjoy it anymore. So maybe that's a trigger. Yeah. Or they want to go from 20 million to 100 mil. That's more challenging without the cash.
Yeah, it's there's a lot of motivations behind the entrepreneur's desire to exit or to go to the next stage. In one of the businesses I worked in, very successful entrepreneur, he built his business from scratch to 25 million. But he said, right, the next stage to take it to 50 million means that I'm going to have to do an IPO or take on an external investor. And I don't want to work with an external investor. I like being my own boss. So he didn't want a new boss. So he said, right, for him, that was the time to get a management buyout in place, which we did in 2003, and move on to the next stage. So that's one motivation. And then another motivation, it's still a challenge now, even for Salesfire. When we took our 2 million investment from Mercia, it was, do we want to have another person sat on the board? Should we just continue bootstrapping the business? And grow more gradually, or should we take the money on board and try and grow a bit faster? It's been the right decision to take the money. We are growing faster, and as long as you really do your homework upon the investor you're going to be working with. Don't take the best offer on the table. Take the one or don't take the highest value offer that's on the table. Take the one that's best for you, because these are the people you're going to be working with and for. And it's worked out well for us in terms of that relationship. But I think that every private equity or external investment firm that you work for will talk about relationship, but it actually really is key in terms of their approach. And everybody's happy when you're hitting your business plans, but you really want to know what's the relationship going to be like when you don't hit your business plans. I've been there. I'm not there now, I'm pleased to say. But it's a tough world. And that's where the relationship really counts.
Yeah, I think that's the thing, isn't it? There's a lot of options if you're sitting there thinking, right, I'd like to get investment, or I want to get out of the business, I want to sell, we need a couple of million to take it to the next step. So, we might sell a percentage of it, but then when we sell a percentage of it, what's that relationship going to look like if I'm still in the business? Do I want to be still in the business? More so, less so, right? So it's sort of getting a feel for what you want as an owner, isn't it? If you want to exit and sit on the beach, that's one end of the scale. But obviously, if you want to then go from the 50 to the 100 mil, but you need that expertise, and the couple of million quid, then that relationship, I guess, could soon. That's a key one, isn't it? Because it could obviously go very wrong if you've now got somebody that's got X% of your business that there's a lot of friction there, or there's some challenges. So doing that due diligence on the people, but I guess going to due diligence, when you're at that stage, where you built the valuation, up, we sort of touched on a few things there around, building the, the retention, the profitability, the revenue growth and the right revenue growth and so forth. And, and built that, the processes in the business. What are some of the things in the due diligence stage when that buyer or investor is looking to get involved to either purchase or invest? What are sort of maybe 3 things that our listeners should be aware of in the due diligence stage?
The due diligence is all about proving that you are what you're projecting yourself to be. So it's just saying, is the story, it's a great story, we love it, do the numbers stack up behind it? So the financial due diligence is, I suppose it's all about being prepared. So it's knowing that these are your key metrics and you've got all of the data behind it, that somebody can come and look at it and say, yes, that stacks up. We track our contracts base every month and we see what the movements are. So those gross retention, net retention numbers really genuinely stack up, and the revenue growth stacks up. So preparation is the key part of it. The trend these days in terms of acquisitions is to sort of have a virtual data room where all of the data of the business, of the financials, are there. All of the data of the contracts are there. So consistency of your contracts with clients is a really important point, because somebody buying the business wants to know, these are the legal terms on which you operate. Who do they apply to? Do they apply to everybody? Have you got one big customer? Or no, they've got a different set of terms.
They haven't got a contract.
No, they haven't got a contract. So having it written down somewhere as a signed contract, and keeping a contracts database is actually a really helpful thing, in terms of whether you do that on your HubSpot or whether you do it to just, a good old filing cabinet. It doesn't really matter, as long as you've got something somewhere where you've got signed contracts that say this supports the business. It's that preparation phase, and it's having access to that data and being able to say to anybody who wants to look at it, this is, sign up your NDA and you can have access to this data that supports the story that we're telling you. So I don't think it's anything to be feared other than the price they charge for the better services. It's if you do everything that you say you do, it's relatively straightforward. You shouldn't get any shocks out of it.
Yeah. I think that's a fair point, isn't it? In reality, you've got the shiny website, the shiny brand, and you're saying you're doing X, Y, Z, and a set of accounts can be tweaked, shall we say? And can say one thing, but the reality is, I like the phrase of, when the tide is out, what is the reality of what? Are you swimming naked, or are you actually? Are you swimming without your shorts on? Sort of thing.
It is. So now you go through the number of big business failures that there've been, and you think, how are they doing?
Yeah.
That week there was one called 2E2. There was a hosting business back in the day. They acquired so many businesses, and we were competing against them. I was thinking, why can't we pay more and build it? And it was pyramid. They were just building and building, and got to a point where nobody could then acquire it. It was too big, and they were always hoping for the next one. And things like Carillion in the construction industry, you just think they're stretching it all of the time. So I think that's where DD will pull things out. If there's, if things are there that you're not growing as you should be. But I think that's where the market cycles again look after themselves. The businesses that go bust are the ones that were pushing it. And then maybe there's a bit of karma there, I suppose, that you see them grow really rapidly, but they don't get the fundamentals in place. So that's where the market has moved to being more conservative and looking for quality businesses. Then that's when the good guys should win. Let's hope so.
So in theory, right now, those that are maybe, shall we say, swimming naked, then that's obviously going to be a challenging time for these guys right now. But for those that are, that are invested in their finance function, that are on it with their cash flow, that have obviously there's a lot more to that, have their CFO in place potentially, and they have. It is an interesting one. I know we sort of semi-joked about it before we jumped on camera or talked about it, but, I think, I can attest to, since I started paying a lot more for my finance function in my business has never been so good. Obviously, there's some ups and downs.
There are.
And I think...
And again, I'll go back to my time days of Time Computers. When they did start to hit trouble, it was always, well, we need to close this store. It's not making us any money. And Tahir would say, well, that's okay, but I need to lose one person from the finance team. So there's also a discipline to it. I think also as a part of my career since 2016 has been as a portfolio FD. So I've worked with a lot of companies that can't afford a full-time FD, but know that they need some of the skills. And most of it's about just going into the business and challenging and looking at what's there and saying, well, which bits can you do better and which bits can't you do? And some of the best finance functions I've got aren't necessarily very big, but they've got people who really care and people who, do go that extra mile. So I think as well as expense, it's quality of your finance function that counts.
But I think it goes back to doing the same old thing that you might have been doing for years until you've gone from that maybe mindset of you started a business and then all of a sudden you've got this 20 million. I know it's not quite all of a sudden, but you've got this let's take a 20 million turnover business.
Yeah.
And you were the guy that was back in the day was logging into the bank and paying all the bills and and deciding on this, that, and the other. Well, obviously those days should have well passed if you're doing 20 million, but
absolutely, it's
then recognizing and investing and starting, whether that is, taking a sort of part-time fractional sort of CFO that's doing X amount of time, somebody coming in and just shining a light on just some of the things we've talked about, whether that's just allocating certain cash for different areas of the business, whether that's, forecasting. I think that's a lot of people I think, that I've seen struggle, they should really struggle to, sit and plan that. So even to plan like next month, it could be a challenge for some people when they're going from maybe that mil to 2 to 5, and it's like, hang on a minute, a mil.
It's a real challenge.
1 year picture, 3 year plan type conversation, and taking some time out of the business. We actually just came out of a full planning day yesterday. Not so much finance yesterday, but more of a, an overriding sort of strategy day. We went through the figures for this year. But we did a full day out of the office, off-site, which we do every year. Well, every 6 months we do. But just recognizing that you need to do things like that, and then having conversations with experts like yourself, just shining a light on certain areas, and actually, in 6 months we could have a real challenge. Well, rather than finding that out in 5 months when it's too late, so just simple.
It's a different one in the agency world. You'd hope that you've got, that retained base and some element of predictability about it. In the retail space, most retailers will have some seasonality as they'll see at Christmas peaks, etc.
Yeah.
And then other retailers will say, well, hang on, what's the weather been like this month? Is it a good spring? Is it warmer than usual? Yeah. Right. The garden furniture is going to come out and it's going to sell more.
Yeah.
And that's one of the great tools that Salesfire has got is this benchmarking. And so that the statistics that, the e-commerce retailer thinking, well, we're just a rubbish weekend or a rubbish month. Is it just us or is it everybody? And if you can just have that bit of comfort that actually that's the market, that's the trend. It's very helpful just to give you a bit that sanity check. And that fits again to having somebody, as you say, from the outside look and say, your numbers are good, but across the industry, this is what it looks like. So I think,
that's a great point.
Advisors in now and again, they're always business advisors like the corporate finance firms. They're always keen to come and meet people who are going to be successful businesses. So they'll always, pop in and have a coffee and share their thoughts and wisdom on things. So I think that's well worth keeping in touch with those guys.
Yeah. I think having. Yeah, that's a great point around also having, like, if you're talking to your financial person, that they've got potential expertise in your industry to benchmark against other stores in that industry. Going back to if a certain industry has a dip, or you have a dip in the outdoor area, you're selling wrapping furniture and barbecues, and it's the worst summer on this planet, which I think this summer was one of those almost, I think, compared to last year when it was like a heat wave.
It probably was.
Yeah. I think last year we bought everything known to man for the guy, you name it. We got it. I got a nice day bed about the size of a flipping house that I've used about 3 hours, to be honest.
Yeah.
Complete waste of money. But it looks nice. And then this summer, I think, I bought some charcoal, it's like quite a different pattern in spend. But obviously if you're speaking to some, your finance function or somebody in that industry, and that it's either not just you, or okay, it is just you. It's not just the seasonality.
What are we doing wrong?
What are we doing wrong
in our promotion? That says, well, we should we try something else on the website? So I think that's where it's really helpful in terms of having that data there.
So we're talking about planning. We're talking about forecasting. Now, for those that are looking at that sort of global expansion, I know you guys, have got plans for. To take over the world. Maybe not quite, but yeah. Obviously, I know a lot of your team have been out in the US a lot this year, and I think it's a surprise for our listeners, but I have a feeling there'll be a few more of your team out there next year and so forth. And so those that are looking at that sort of global expansion, but then tying that back to the finance side of things, what advice would you give to those guys?
Well, we're approaching it. I guess it's one of those where, particularly with international expansion, you can see that the marketplace is there, so the market's attracted, and you can therefore think, right, we should try this, and it's all about getting a test of what works best. Now, lots of advisors I've spoken to have said, "Oh, you need to have establish an office, 1 or 2 people, get them out there, make sure it's a senior person, and go out and do that." But that type of international expansion still will take 2 or 3 years. And I've been in businesses before where you said, all right, we'll open an office in Texas or whatever. And it just doesn't work, and it's unsupported, and they're not wholeheartedly invested in it. So we're still at the stage, I would actually say, we're still dipping our toe in the water. We've got some great clients we've won in the US, and it encourages in terms of the expertise. What we've really found is, particularly on the SaaS side of things, you can sell from the UK as easily as you can from the US. You don't need an office in Michigan to be able to sell out.
Yeah.
So
to sell somebody then.
The e-commerce model actually works in our favor, and so we're seeing some success in the US. But I think what we're actually seeing is, constant frustration of mine, is that actually you see people overpaying massively for a service, and then they think, well, why aren't we winning that business? And then I look at it and I think, well, because if somebody's paying $40,000 a month for something that we would be charging $10,000 for, they'll say, "Oh, well, yours isn't as good." I think, it's actually better, but don't believe it in terms of the price, because you used to be ripped off. And it's that, I suppose, challenge of the FD again is saying we need to talk to the FDs and say, are you really getting the value for money you think out of these? So I would say the transactional sell in the US and global expansion should be relatively straightforward. The way it gets more enterprise level, that's where it's more of a challenge, and you do need the establishment in the US. So I think the way that we'd model it, or I would suggest you model it, is you've got your base case in terms of the business as your financial forecasts, and then you have to have the funds and the investment decision that says it's worthwhile investing this much money for us to take 2 or 3 years to see it to be realized. But you don't do it in a way that lots of people raise lots of funds and go and build a fancy office and employ 30 staff and just say, right, we're just going to do this. They're all in marketing, and then there's no product. So it's having again the finance challenge of what's it's going to cost, what's the return going to be, and over what period. So I think as long as you approach it from those simple questions, it's the same in the UK as it's the same in terms of global expansion.
No, I like that. I think the pricing one's an interesting one, isn't it? I think in any product or service, SaaS, eCom, pricing can be very different, depending on the territory.
That's one of the ones where in terms of having that ability to look out in the marketplace and look at, well, what our competitors charging, and that pricing question. It is about value. It's But I actually think product development is becoming. The products are very similar out in the marketplace, so it is about what are you really getting for your money, and that's where the FDs of these businesses should be challenging that.
And I think that's where our listeners, the savvy listeners that are with us now, our sponsor for the podcast is Pricing, and their dynamic pricing function will enable you to price differently, based on different variables, criteria, location, etc. So, little tip for you there that obviously pricing in certain countries is very, very different. Different taxes.
Absolutely. And I think that's where you get a really strong business case there in terms of the solution. So but very switched on, guys.
So Tim, it's been an absolute pleasure. But I think before we finally wrap up, I'd be keen to understand if you're willing to share a few more things or things that are on the roadmap for Salesfire. I know we're working very closely with you guys in this coming year on some new initiatives, but anything you could share with our listeners around the roadmap.
Conference, and I'm going to remind myself here now when it was, because I know it was raining. But,
about 3.5 months ago, wasn't it?
Yeah. Back in September, we launched our email sequences solution.
Yeah.
And really the product development over the next 12 months with Salesfire is all about building out from that email solution into more connected journeys, so you can see which individual users you're targeting and contact more of your users. So from a retailer's perspective, the more accurate and personalized emails you can generate through customer identification, it really makes more success in terms of your business. And I think that's really the focus still of Salesfire in the next 12 months. It's improving the conversion rates on businesses, just so you can really drive accurate, personalized selling messages that work. The more emails you send, or the more communications, to be more general, that are focused to a buying decision, it's got to be the right thing to do.
And that ties straight back into that valuation, that retention, that growth in repeat business, that longevity, that lifetime value, which is really, I think, is the key to most e-com stores' success. Acquisition is, obviously that, you need to invest, but if we're getting everybody to then recommend, share, buy again, impress, delight, and the customer turns into...
It's a lot easier to use the customer base that you've got than go and try and find a new one. So,
look after your customers. It's simple, isn't it? Whereas, burning everything on acquisition, which I know not many people do now, but ultimately, we're sitting here at the beginning of the year, what are you doing in your retention, CVO, lifetime value mix? I'm sure that's where, when you step back over the November, December silly season, you're thinking, if only we'd increase basket size by 15% in the last 2 months, what would that now look like, in terms of our bottom line? Well, thanks, Tim. It's been an absolute pleasure. I like to finish every episode with a book recommendation. Do you have a book to recommend to our listeners?
Well, I've got a couple. I can answer this question. But the serious one, or rather one that I just find is a fascinating book, is called Operation Mayhem, and it's by Steve Haney, MC. So it's, I suppose you call it a tale of daring do, but it's all about a platoon, the Pathfinders platoon in Sierra Leone in 2007, I think it was. Just a brilliant read from start to finish. It's just one of those reading. You can't actually believe that a troop of 26 soldiers defeated 3,000 terrorists in the jungle in the middle of nowhere. It's just, you read it, and I suppose I recommend it because it's a guy from Middlesbrough that we're based in Salesfire. But just a fascinating read. So that's my serious read.
Yeah.
And then the other one's Wind in the Willows. I love Wind in the Willows, but mostly because I've never been able to look at Boris Johnson without thinking that he's Toad of Toad Hall. So you'll have to read the book again to see, but it's there.
I'm always visualizing now. I think I have it. We might have to, maybe our our producer, can mock something up about now. Morris Johnson.
Toad of Toad Hall.
Let's do it. Toad of Toad Hall, Morris. Let's see what happens on the edit.
Oh, great stuff.
Well, thanks, Tim.
Talking to you.
It's been an absolute pleasure. For those that want to find out more about you, more about Salesfire, what's the best way to do that?
Check our website, salesfire.com. And there are far more interesting people at Salesfire than me. So, people who actually talk about e-commerce, no, I only talk about finance. Check out our website, salesfire.com.
Thanks, Tim. It's been an absolute pleasure. Speak to you soon.
All right.
Bye-bye.
Cheers now.
If you enjoyed this episode, hit the subscribe or follow button wherever you are listening to this podcast. You're always the first to know when a new episode is released. Have a fantastic day, and I'll see you on the next one.